Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of September 23rd. It is September 23rd, the market is closed. I was doing these videos and market updates on the weekend, and I'm going to start doing them on Monday evenings. That would be Eastern time. So that will be the schedule going forward, free up my weekends a little bit. And so let's get into it. Each week I go through the same process, which just helps me decide how I'm going to be trading. I do want to point out that this article and the video are updated each week, but conditions do change throughout the week. So I'm monitoring these things that I talk about throughout the week, and then we can decide how aggressively we want to be trading based on how those conditions change. So the stock market outlook based on how major indices are performing, the price action in them, market health indicators, we'll talk about those, recent watch list trade performance, and then we can also check out sectors if you want to zero in a little bit on what is moving. So heading into the week of September 23rd, conditions are good. I wouldn't say they're perfect, so we want to take that into account, but market health indicators are in good shape. You can check out some of the current watch lists. The best swing trading stocks list for September was just updated. That's a list of very strong stocks and a list of very weak stocks for potentially buying or shorting. And I prefer to do one or the other, depending on how strong the market is. Right now we're in pretty good shape, so I prefer to be using the strong list and buying. These other lists are more for if you're a little bit longer term and you're looking to use the changes in the overall indices. Like when we move from poor conditions, that's the time to back off, but when things start to perk up a little bit, that's when you can buy some of those stocks that you've maybe been eyeing and that dipped a little bit, but you've wanted to buy them for some time, and that'd be an opportunity to get into those. So let's look at how the indices are doing. So we have a few different ones. We have the NASDAQ, the S&P 500, the NYSE Composite, the Russell 2000. They're each looking at a little bit different segment of the economy or of the stock market. We also have the Canadian index over here, and we'll get to Bitcoin and gold after. So the S&P at new highs. So we basically have a higher swing high, a higher swing high here and a higher swing low. So moving in an uptrend at the moment, moving up recently. The NYSE Composite, same thing. Higher swing low here and higher swing highs. That's good. So we have those two in, let's call it, pretty confirmed uptrends, especially the NYSE Composite. The Canadian index also just, sprinting higher right now. The NASDAQ 100, I wouldn't call this a confirmed uptrend just yet. We're hanging out just below this swing high. We've kind of got up to it, so that's a good sign, and we made a much higher swing low. So I'd say that's pretty good, but we're not as strong as some of the under indices. And the Russell 2000, new swing high, higher swing low, but it gave it back like right away. On Monday we sold off, we're back. So again, that's good that we made a higher swing high and a higher swing low. Maybe not so good that it gave it back pretty much instantly, but so this one's kind of okay. So we have a couple indices with some pretty good price action and a couple that are not quite as good. So like I said before, pretty good conditions, lots of stocks moving well, everything moving up recently, right? Over the last couple weeks, stocks moving up. So that's a good thing. Lots of good things. It's just not quite perfect. Bitcoin. We had talked in recent weeks, we're at the bottom of this big channel that's been going on. We can't see the full channel. Have to zoom out a little bit to see it. But you can see the big channel going on here just from the part of the chart we can see. And I talked about this. I'm not going to try to predict when the bounce is going to come off that bottom because it may not bounce. So we wait for the bounce and then get in on a pullback. And we had a couple little pause here and then also a nice couple day pullback here and then a shot up. So some nice patterns there. Now we're kind of at that inflection point. We've stalled out near that prior swing high. We're consolidating again. This is the time, okay, we get to see. Are we going to make the run toward that upper channel, which would have to occur first before we can get, the big breakout. to that potentially 100K mark or something like that. So Bitcoin's still pretty interesting here, moving up off the channel bottom, working its way up. Last time it got up to about here and then fell all the way back. So we're going to see if this time's a bit different, but still some opportunities here to potentially, if we start seeing that upward movement, you can pick your entry points and see if you can get a decent reward to risk up into the highs of the channel here. And then if it keeps running, might have that bigger move going on as well. The gold miners doing really good. Higher swing highs, higher swing lows, helping to confirm what is going on in gold. Basically just a steady run up. Recently had this consolidation breakout, which we had talked about the prior week, and yeah, moving nicely to the upside. So lots of positive things out there. Lots of opportunities for places to get in for some possible trades, whether it be gold, Bitcoin, and quite a few stocks as well. So let's look at market health indicators, just a little bit different look at what's going on under the hood of the market. This is the S&P 500. Volume not important to me at the moment. It's mostly just for these follow through days or throw up days. And this is a measure of overall volatility. It's just measuring the daily percentage movements of the S&P 500. When we have really big downside movements, that's a warning sign. During uptrending periods, you generally do not get big sell-off days. When you do, that is a sign that people are nervous, scared. So once we got this first one, a little bit more of a flush out after that. Had another big one here and a little bit more of a sell-off after that, but we have recovered. So I would say this is neutral. The heightened volatility is still in the back of my mind, even though we've had a week or so, a couple weeks now, I guess, of lower volatility and mostly movement to the upside. But this still in the back of my mind a little bit, just because once we're in this kind of environment, it seems easier for those sell-off days to happen because we're just in a higher volatility environment. So until we kind of get a little further out of this and we haven't seen those big sell-off days in a while, I'll probably keep this as neutral. So not good, not bad, just something to be a little bit aware of. This is the advanced decline line. Advancing stocks minus declining stocks is a cumulative number, and it has just been marching higher ahead of the S&P 500, which we talked about in prior weeks. It was making new highs well before the S&P made its new high last week. So, very good there. This is up volume divided by total volume. I'm just looking for very extreme values. We have not had any. I want to see them hitting this upper black line or this lower black line. Nothing recently. This is the percentage of stocks above their 50-day moving average. Just generally much easier to make money when this is above the 50%, because that means you could, it's not quite that easy, but picking a random stock, if more than 50% of stocks are in uptrends, there's a better chance that you'll probably be able to just randomly make money. Whereas if most stocks are below their 50-day, they're not trending up, they're not moving up, then, if you just kind of, the old adage, if you throw a dartboard at the newspaper section of the financial section of the newspaper and pick a random stock, chances are you're probably going to be losing. Of course, I don't recommend picking random stocks, but the idea being that it's just going to be easier to make money when most stocks are moving up. And most stocks are moving up right now. 77% are above their 50-day moving average. That's of the S&P 500 stocks, 63% of all U.S. stocks above their 50-day moving average. So pretty good in terms of health indicators. Ultimate indicator you, of course, want to look at is how are your own trades doing? I like to view trading as a feedback mechanism. If things are going well, I continue to trade. If things are not going well, I reassess and look at why things aren't going well. Is it me? Is it the market? So use your own trades as a feedback mechanism. Don't just keep hammering away if you're not doing well. Because market conditions might be good And if you're not doing well, that says something about possibly your process or the strategies, and vice versa. Maybe the market conditions aren't good, but you're doing extremely well, and that type of environment suits you. Sectors on the move. Consumer cyclicals, or discretionary also called. Real estate, industrials, financial, base materials. I'd focus probably on gold there. And we can see this. Consumer cyclicals strong over the last week. Energy also up there, making a bit of a comeback. It's been one of the weaker sectors. Industrials we see in the middle there. Financials still up, not one of the strongest last week, but we do see financials and industrials kind of in the upper sections of the 1 month and 3 month performance. So not the strongest, but worth keeping an eye on. And yeah, basic materials also not the strongest over the last week. But we looked at the chart of gold, gold and gold stocks doing fairly well. So something to keep an eye on. Real estate, we've mentioned pretty much each week. Doing overall pretty well. Not the best performer the last week. Didn't make any ground, but it's up here near the top on the little bit longer time frames over the last month and 3 months. Been a really good performer. So what am I doing? Well, long trades in stocks, definitely an option right now. Gold and Bitcoin as well. I'm not fully deployed in stocks just because there's, a few little hiccups there that I'm not 100%, or it's just not perfect conditions, right? So that's basically how I calibrate capital. If things are really good, then I'm fully deployed. If things are good, then I'm not quite fully deployed. Good, but not ideal. So still lots of opportunities though. We got gold, Bitcoin, and definitely some stocks to consider because lots are doing well. So that's your weekly update for stocks. And again, these will be coming out on Monday evenings going forward, at least for the next little bit. Have a great week out there.